I guess, existential question for advisors is AI going to take my job?
There's probably always going to be some number of human financial advisors and wealth managers. The person born today, it's 0%. It may be unpopular, but I just think like that's a very real possibility.
Hello, everyone. Welcome back to the Advisor Upside Show. So it's not every day that we see wealth management stocks tumble by 10 or 15%, but that did happen earlier this year, actually right after I had joined the Daily Upside, when Altruist made a big announcement about its tax planning platform. Really interesting to see, and we're fortunate enough to be joined this week on the podcast by none other than Jason Wenk, CEO at Altruist. So Sean, great guest this week. I'm sure you're excited.
Yeah, it was really fun. I spoke with him early in the year when it happened, and he gave me a lot of interesting context and color about how it happened and a little bit about Mexico, which you'll see. So, John, should we get right into it?
Let's do it.
Today we're joined by none other than Jason Wenk. He's the founder and CEO of Altruist, and if you spent any time in wealth management over the past several years, you've probably seen Jason right in the middle, smack dab in the middle of an AI conversation. And that's for good reason. Back in earlier this year, his company launched Hazel. It's an AI platform that's trying to automate some of the more complex tasks that advisors do. But the significant thing that happened was it actually sent shares of several publicly traded brokerages tumbling for a couple days. And I'm talking about some of the biggest names in our space and double-digit percentage losses. And they've since recovered, but I think it's a good place to start, Jason, if you don't mind. You were actually trying, at least, to enjoy a vacation in Mexico when basically all hell turned loose and your phone exploded. And I think you said there was a connection to the Shawshank Redemption too in there somewhere, but maybe you give us a little bit of color of how it all went down and what it felt like for you.
Sure. Well, awesome to be with you guys. So thanks for letting me join. Yeah, the story before the story is I'd been pretty heads down for a long time, and some friends of mine and my wife's, Alex and Rosa Chlekian, who are also advisors that we work with. They also live in Los Angeles, where we live. They'd been the most patient, nicest, dearest friends. Where like every other month, they'd go, "Hey, you guys free to get together for dinner?" And like for 9 months, it was like, sorry, can't do it. We finally get together for dinner, and sort of at the dinner, it's like, yeah, it's been pretty heads down. Haven't had a day off in a while. And they were like, we're going to Zihuatanejo, hence the Shawshank Redemption, kind of tie-in. But we're going there. Let's say it was whatever, like 2 months from now, something like that. And I think we'd all had maybe 2 cocktails, and so I was like, "That's the best idea ever. We should for sure go with you." They extended the invite, and so then, like just so happened the timing of our release of our tax agent within the Hazel system released. We got down to Zihuatanejo, Mexico. I had like one day where it was like the perfect day, like water's perfect, wet, temperature's perfect, food is perfect, right? And that was the first day we were there. The next morning I wake up, I thought it was a hoax, but my phone's kind of blown up. And the one that made me kind of scratch my head was there was one from a reporter at Bloomberg. He's kind of talking about how there was news spreading fast through the wires, and wanted to talk to me as soon as possible. And I'm like, what is going on here? I load up CNBC app on my phone. I see stocks tumbling. There's already a story about our agent. And so vacation was over. I stayed in the hotel room for the next 48 hours, then flew home. But that was how it all happened. I still need to make it back down there. It's a wonderful place, but I have like a little PTSD, like that I'll never get to have a real vacation again.
Yeah. It's a crazy story, and we, at the Daily Upside, we're reporting on it, trying to track you down, Jason, and get a comment. How has life been since? Have things gotten any calmer, or perhaps running crazier than ever? How's your summer been?
Yeah, I mean, so I'd say like the media whirlwind lasted a few weeks. There was once I got back to California, we did a bunch of a few handful of like virtual TV appearances, other interviews. Flew out to New York for a couple of things. So that part I'd say like is kind of life is normal. It's been whatever 6 months, and so not kind of being too disrupted there. The from a business perspective, the attention really served as like a massive tailwind. Like we'd already, I think almost every quarter has been a new record quarter for many years now running. And then all of a sudden we saw like sort of our top of funnel, sort of the demand from advisors. I think it went up, north of 100% in Q2.
Wow.
And then, basic funnel metrics of business like ours is once you have the folks kind of saying, hey, I'd like to talk and learn and see a demo, within a 4 to 6 months, you start to see a material amount of new assets hit the platform. So Q2 is this huge swell of like top of funnel, and then it resulted in just a monstrous, kind of summer in terms of onboarding new advisors. So we've had a few releases where we've talked about some of the folks that have come on board, but the like month of July, as an example, was 50% better in terms of net new assets than any month in the history of the business. So like,
Wow.
and that's sort of that's the after effect of what happened 4 to 6 months prior, and so we're starting to see that. So it's been a crazy year, but different types of crazy, right? So it was media attention that then turns into an influx of opportunities, and then now actually onboarding those opportunities, which is a whole nother type of work. So it's been a wild year. I have not had any material time off. I think I've taken 2 days off this year.
Wow.
TBD on if I'll get something between here and December.
Hopefully. And just a quick comment, Sean, I think you'd probably agree, probably like the biggest single press announcement, like in terms of moving the market, in terms of changing the trajectory of an already successful business. But just as a member of the media and observer, like, single press releases don't really tend to create such drama, Sean. I mean, we don't tend to see this.
Yeah, I mean, and that's the one thing I was going to ask too. Just lastly on the whole thing was that because I've covered fintech and wealth tech space for a long time, and the Kitsis map was like my Bible on the beat. And I've literally never seen an announcement literally move the markets. And I know it ended up in maybe an analyst report somewhere, and it kind of spooked some investors. But I just wondered, like, wouldn't the analysts and wouldn't it be known that AI is coming to wealth management? Wouldn't it be maybe even baked into some of those things? Or what was it, maybe the reverse of that is, what is it about the particular announcement that you think really impacted investors in that way? And maybe it was a particular timing. I mean, what do you think that it was there?
Yeah, I think timing played a major part. There was like the week prior was when we started hearing the term SaaSpocalypse a lot. So there was similar, there would be a release from Anthropic that maybe it was like a co-work agent that all of a sudden made certain SaaS products feel pretty feel less relevant. And I think the market was looking for like, well, what's the next shoe to drop? Like, what other industries are going to be impacted, via these AI products, and in particular, like the vertical applications. So there's the language models, which are powering a lot of the application layer, but you have to then go build the application. You can just feed stuff into an LLM and have it do things necessarily. You have to use the part of like the LLM to build these, more turnkey, kind of workflow, either enhancers or in some cases replacements. So timing is a little bit of it. I think the other part, this is just me speculating a bit, is that there's new AI product releases every day, and most of them is kind of like yawn. Who cares? Doesn't make much of a difference. And so at least within wealth management, ours was the first that very materially went after knowledge work, like very expensive knowledge work. Most of the early AI products in wealth management were very simple. It's like a note taker. You attach it to your meeting, right? It syncs the meeting notes to your CRM. Nice little enhancement. Honestly, doesn't change the world much. It's not like that's eliminating the highest paid jobs or like making Goldman Sachs, irrelevant or something. And the particular agent we released was a tax agent, and it does, for those that have seen it, I mean, it's incredibly powerful. You can take like someone with a tax situation as complex as a multi-billionaire running, family office with, hundreds of LP positions and private assets and real estate all over the world. And Hazel can ingest all of that data, and with just a few minutes, come up with an incredible summary, and then specific action items that could be taken to save money on taxes. It can even automatically review your past tax filings. So if you've done your tax return, whatever, it could look at the last 2, 3 years, and it will go through and essentially audit those prior returns and see if you missed anything that you could then file an amendment to go get money back because something was done incorrectly. And once people start using it, it is incredibly good. I mean, the data so far is the average person who just has a past tax return analyzed finds $5,900 of overpaid taxes from prior years. So effectively, the work that it does, in some cases it's many hundreds of thousands or even millions, but the work that it does is something that could always have been done by humans. In fact, it was done by humans at a very high price point for very high net worth people. And all of a sudden, like effectively the token cost of doing this is just a few dollars, right? It's like $2 to $4. And the time is, under 5 minutes. So we took something that, again, if you had an army of tax attorneys and CPAs and, kind of high net worth, family office, multifamily office type of people, and we've just taken the work they did and we made it accessible to anybody, and for virtually no cost whatsoever. So I think part of it is, when you see the innovation turn in such a way where you go, that's more than trivial. Like that's more than like an administrative enhancement or something like that. It's very, very practical. And these will even create things like the letter that you would send in with an amended return explaining to the regulator, what was changed and kind of what the expected refund would be. So I mean it does a lot of the work, right, that would be required to go get back money from kind of past tax returns that were misfiled, but also again tells you what to do going forward so you don't have that problem. I think that felt a little bit different again than like something that helps you finish your email or something like that, right? So
Right.
So I think that's at least a part of it combined with some really good timing.
I would also argue that people just inherently care a lot about taxes. And so, getting a tool that can provide, more savvy tax advice to more people just will inherently get a lot of attention as well. I do a lot of reporting on advisor firms, acquiring other firms because they want tax capabilities. So tax is really sitting right at the heart of what a lot of clients are expecting and what a lot of advisors want to do. So, from that perspective, it's not really surprising to see that this particular announcement had a big impact. But just stepping back, Jason, I'm just wondering, what's it like for you, to have this firm, Altruist, and to be competing against like some of the biggest legacy names in wealth management and in custody? I mean, is it intimidating to go up against some of these big names or invigorating? And of course, the AI approach is fundamental, but what would you say to all that?
Yeah, so maybe I'm just really dense, but I've never been intimidated. I think part of it is I've been doing this for a long time. So I've been in and around wealth for, 26 years. And I remember when I started my first business in 2004, and I was going to register an advisory firm, and I had to figure out, like back then, it's like there wasn't a lot of consultants you could hire. So the internet was also not highly helpful back then. But figured out like some of the building blocks. File registration with your state. Eventually, you need to have a custodian. So back then, I called up all the big names. Most wouldn't take a call because I was young, brand new, no clients. Finally got one to take my call, and it was TD Waterhouse, the precursor to TD Ameritrade, which then eventually became acquired by Schwab. But I remember going way back then. I thought, this is great. I'm going to have this big name. People know, like, and trust, and they'll do all the heavy lifting behind the scenes things. I'll go work on building, something that's helpful for end clients. And when you start asking them like the stuff that you need to, like basic things, okay, cool. So now when I to open these client accounts, like what's the best way to do that? Oh, you just go to our forms library, you download the form into a PDF, and you fill it out and you send it to us. And I thought, well, that's weird because I can just go online as a client and open an account on the internet in like 1 minute. Why do I have to go to a forms library and have the client sign all these things? They wanted you to back then send it in via fax machine. This is crazy.
Yeah.
I was like, well, I guess if that's a limitation, maybe they'll make it digital soon. They still don't, it's still not digital. 20 some years later, and like we're the only place where you can do everything fully digital without DocuSign envelopes. It's kind of wild. But yeah, I could go on and on. There's 100 of these things. Like if you want to bill your clients, oh, you can't do that. You need to, have a third-party software platform. We'll send them an overnight file. The third party will reconcile this CSV file and then allow you to calculate things like average daily balance and what should a fee be. And then they can create a fee billing template that you can then upload to the custodian site like a number of days later. It's like, it's kind of lunacy, actually, and it's still done that way everywhere other than Altruist. So I think when I started it, and part of me was like, I was hoping this would eventually land in the market. You start in 2004 and, surely by 2010, there's robo-advisors and still matter advisors are left still doing DocuSign. Robinhood launches, whatever that was, 2014, 2015, and you think, okay, like they're trading stocks commission free with fractional shares and opening accounts on a phone in under 60 seconds. Surely advisors are going to be able to do this soon. It's like, nope, sorry, still keep sending in your DocuSign and waiting weeks, and trading in whole shares and paying commissions. So for me, the opportunity was incredibly obvious. It was like just you have this very large, fast-growing market. The RIA custody market today is 10 trillion. Probably when I started the company, it was 5 or 6 trillion. It's not slowing down. It's going to be 20 trillion, then 50 trillion, then 100 trillion. Right? This is all going to happen over the next 20, 30 years. And meanwhile, the industry was compressing. Back in 2004, there was TD Waterhouse, Ameritrade, Scottrade, E-Trade, Schwab, Fidelity, Pershing, Folio Institutional Trust Company of America. There's a whole bunch of custody options. Today, basically 2 companies have over 80% of the entire share. So this is as perfect a storm as you could possibly get to launch a company, to go actually do things the right way. And so I think if you start there, you go, there's nothing intimidating about competing with big companies. Like, in fact, the bigger they are, probably the harder it is for them to innovate, and that opens up like a really big opportunity for us. I will say it's insanely hard. Like, although I was always confident about the opportunity, even I underestimated how challenging it is. Like the surface area of the technology. There's a lot of regulatory approvals you need. There's capital requirements to operate broker-dealers. The ongoing support and service is non-trivial, no matter how much automation you bake in. And so we've been at this for 7.5 years. And I still feel like there's a lot of work to be done. So when I first started the company, I thought, oh, maybe it'll take 2 to 3 years. We can build this with, $20, $30 million. Turns out it's more like maybe $500 million to build this, and it takes, closer to 10 years, right? So it's a lot harder than I think people realize.
Yeah, that's great insight, and it will be very, very interesting to follow along in the next, 3 to 5 to 10 years, Jason. We're definitely going to be following the story. Any other questions for this segment, Sean, or should we maybe move on to the next part?
No, I mean, I was just going to say, yeah, I think to your point, it is shocking how slow moving wealth management can be, and I guess to your point too, it's just a lot about the regulations, and so it's so highly regulated, and it's people's monies and livelihoods, and so it should be. But I guess to your point, yeah, it does take a while. But yeah, let's move on to the next segment. And Jason, thanks. We learned a lot, and we hope you make it back to Mexico one of these days.
Yeah, for sure.
This episode is brought to you by the Retirement Upside. Let's face it, there's nothing simple about retirement planning. When should your clients claim Social Security? How much can they safely withdraw each month from their 401k? What about the right mix of stocks and bonds for a 30-year retirement? Don't even get me started on optimal Roth conversions and inherited IRAs. I could go for hours. We launched the Retirement Upside to bring you the answers to all of these questions and more. We come to you in your inbox every Friday morning with the latest news and expert views affecting your clients as they prepare for and navigate life after work. Subscribe today at thedailyupside.com. We're lucky this week to be joined by Jason Wenk, the CEO of Altruist. We're calling this one the state of AI. I would say, roughly a year ago, maybe 2 years ago, people were talking about note takers, and that was a really exciting thing, or maybe meeting prep tools. And I think, Jason, increasingly we're getting to the sort of the state of AI where more client-facing functions are sort of relying on AI, and AI has really kind of become a part of the typical financial advisor's day-to-day experience. Sean, it reminds me of a conversation we had on a prior episode where the uptake of AI tools is very unlike the uptake of prior technology. Advisors really seem to be willing to use these tools and really put them to work for clients. So As a follow-up, Jason, what's one thing that's still maybe a big misconception about artificial intelligence, and maybe what's one thing that AI still doesn't do well that you'd love to see it do better in the future?
Sure. Well, I'll start in the second part. I'd say that uh, it, although I think the potential is there, practically speaking, AI does very few things well in wealth management. So, like for example, it's not able to manage portfolios on a fully autonomous basis well. It's not, nor was it intended to be good at things like mathematics. Mathematics are critical to how you think about financial planning, budgeting, asset allocation, tax management. So while they can be integrated into a broader platform like AI, as most people think of it, like going into ChatGPT or Claude or something, out of the box, it's not particularly good at almost anything, for wealth management. Now, if you use it combined with a lot of deterministic software, a ton of context, you have to really provide a lot of context. You have to tune the model for some specific needs. You have to build harnesses to make it affordable. AI does not care about affordability, so these models will just, run incredibly long, prompts if given the opportunity, depending on which model you're using. So you have to kind of train them, create the right environment. You have to build very meaningful evaluation databases to test your output against to ensure that the quality is high. And so again, the capabilities there do a lot of things, but out of the box, for the most part, it's good at summarizing text. It's pretty good at picking up on audio and video cues, so kind of psychographic kind of cues that might come from a conversation.
Mm.
And obviously you can get you could probably get 80 to 90% correct answers on just about anything, right? So there's still value in that, but in our industry, a client can't ask you, how much can I contribute to my 401k this year? And you can't be right 85% of the time. You have to be right 100% of the time in this case,
Yep.
right? So I think that's kind of the state of where's it not good yet? The things that it's particularly good at, and some of the things we're working on, I think the right way to think about it is, at least our point of view is we support financial advisors who support clients. And so if we kind of think about the arc of a client and an advisor relationship, it might start with Sean refers John to me. I'm the advisor, and I get introduced via email. John and I have a couple emails back and forth. We eventually schedule a time to speak. We then have a conversation. That's followed up maybe with an email requesting some data, some documents, et cetera. You upload those to a folder. I then go to work on analyzing what you have, and maybe coming up with a baseline. Hey, here's John's situation as a snapshot, and let me go ahead and show you a few things you might be able to do differently. And so I'll show you how those things might work out. Get the classic kind of financial planning proposal. So when we think about that whole process, probably 85% or 90% of that work can be done by AI. Human doesn't need to do it, and it can do it better than humans. So as an example, gathering the context can happen and be synthesized very automatically. That first email automatically fills out sort of a contact record. We built this thing which recently called Intelligent Client Profile. So as soon as there's interaction, it starts building this profile. And then every interaction, you upload a document gets absorbed. We start building out this really rich profile. Think of it as almost like a CRM record, but it is way better than any CRM record you've ever seen. And the AI also adds little nuggets, like it'll catch something you said in a conversation that clearly was important. Maybe it was that you went on a monologue for 4 minutes telling a story, and it was an emotional story, and it really picks up, it timestamps it, and it kind of adds it to that profile. Like, hey, this was something that was shared on this date, this time. I can replay that if I want to, anytime. Just click on it, boom, replay that message to kind of reinforce that was really important to John. So now as we're thinking about this planning process, you're building this great record. Now when it's time to build the analysis, no data entry is required. I don't have to go launch a separate financial planning software. In our world, Hazel can just literally go build the financial plan, and the tax plan, estate plan, all vectors of planning. There's no notion of the way software has worked historically is that you have two primary constraints. It's very binary. First constraint is the data intake. You have to fill out a certain number of required fields in order for it to work. And once you do that, then you can create an output that's the second kind of controlled, and this is going to be a defined output that you have no control over, right? So, in other words, um, now there might be like 5 modules or something, right? But like the point is that like you're constrained by you have to put a certain amount of data in, and you're constrained by what can come out on the back end. And with AI products, like that goes away entirely. All of that context that's being built in this example about John's life allows us to kind of create, well, this is what a perfect plan should contain. Maybe this is someone who, is getting ready to buy a home, or they just switched jobs, or they're in their 30s versus in their 70s. They're a business owner versus they're an executive, et cetera. Right. So like, you can build these very bespoke ideas of like what should a plan look like for that person with no data entry and no like toggles on which modules. It just automatically builds. And so you can imagine like the process of like serving a new client is just much better, much faster. You've taken down the barriers to onboarding new people and doing really great work for them, by again, some very, very large order, multiple 3, 4, 5 orders of magnitude. So those things are available. You can do those today. They work really well. Agentic actions are still not quite there yet. I think mostly it's a trust thing. You've seen like the breakouts where it's like OpenAI has a model that escapes its sandbox and attacks,
worrying,
competing.
say the least.
Exactly. So we probably don't want to just like give it our login credentials to our brokerage accounts and say, go hog on these things, or like give it our bank account and say, let's go ahead and like, do stuff there. But it's really good at, I think, still these, they're kind of like human prompt. I think the semi-autonomous work that is knowledge-based and can get us, to a place where every single client is served with no compromise, like great planning, comprehensive, personalized, and done for just a few dollars, right? So like you've truly democratized access to great planning. And I forget who said this, is like one of the kind of AI thought leaders, but they made this comment how they use the term average intelligence will be abundance. I think a better way of saying it is that very high levels of intelligence will be abundant. So, you think about like people that you meet in the world, right? You meet 100 people and it's usually pretty obvious, like, wow, these 5 or 6 people are just a lot smarter than the other 95 people. Somewhere you can also be like, these 20 people, there's not the sharpest tools in the shed, like from a planning and finance perspective, everybody's going to start to look like that top 5 or 6 people. Like that's going to be the baseline. And that's good. Like these are good things, where like, again, more people will have, again, very comprehensive, all the different vectors of like great planning. And it will look like it's been delivered by those people who we would all tend to go, those are the top 5% or so. And that's all like today. A lot of things could happen obviously down the road.
My final question for this segment, Jason, is, is there anything that could, it's such a bright future and so exciting to think about what's possible. Is there anything that could limit this? I mean, like just access to data, access to chips, access to energy. I mean, is that factor into your planning? Or, I think the infrastructure will eventually be built to support this future, but don't mean to put you on the spot, but is there anything that worries you?
Yeah. First of all, I sleep very little. I am constantly paranoid almost all the time. So part of that, our lead-in story about why I don't vacation much and take a ton of time off is because I'm
fair enough,
constantly paranoid. And in the case of AI, like there's a handful of things that could go wrong. Red capture is one of them. So we start to regulate this. There's a fine line of like where's regulation useful and where's it start to really slow us down. So that's one part. I don't worry a ton about that. I feel like, there's enough people, fighting for, kind of global competitiveness in AI that we just will have to accept that there's some amount of, cost of that, of that lead here. From a data perspective, I imagine like we'll get into a place where people will start charging for data. We're already seeing that a little bit with some of the big banks. In order to, in a perfect world, a client connects to a secure AI system. It pulls in every piece of data about that person. Again, having that data combined with the context is how you get really good outcomes. So I don't think that'll like be a huge hindrance, but there will be a cost to it, which I think is probably fair and not unreasonable. And then I think that probably the biggest not the biggest risk, but the most likely risk, like the thing that's most likely to be problematic, is that the foundation labs become really challenging to work with. And so we're already seeing this a little bit, like it's more of a paranoia than a reality, but OpenAI has bought, I think, 2 different fintech companies. Seems like they're probably going to want to eventually get into get closer to being able to, they have a huge consumer base, doesn't seem unreasonable that they're adding these fintech companies to be able to potentially do fintech things like within their ChatGPT product. Anthropic already has a pretty large team of people that are building in financial services and wealth management. And so one of the things that allows for incredible innovation is when you have free markets. If you take the 2 leading labs and if for some reason they become walled gardens, or none of us want to work with them, right? Like, I mean, I'd say, I'm very interested in building our own model and getting away from them altogether. I don't know that we need, a trillion parameter model for wealth management. Like, in other words, what they're doing is it's so vast that it has to requires such a vast amount of like energy, compute, and so forth. I think us and many other industries will start looking at what we're all doing and go, maybe it's not so wise to have like a duopoly that's also quasi competing with us, and we're all nervous as hell about giving them our data.
Yeah.
And that could just like slow down innovation, so it'd be a shame. I wish they would focus on being picks and shovels providers and not try to get into our space. But I kind of feel like there's a chance they want to get into our space, and companies there'll be a less and less trust if they continue to do that, which will then slow everybody down, because then we're going to all start going, let's build our own models. And I don't know that it's a good thing if there's like 100 companies all trying to build their own proprietary model, especially if they're subscale and they don't have a ton of data for training. So I sure hope that doesn't happen. But I think that's actually the most likely thing that could really slow down AI innovation it's more of a distrust.
I appreciate you tackling that, Jason. Sean?
Yeah, and one more quick one, maybe sort of towards that as we look far into the future. But I think like the I guess, existential question for advisors is AI going to take my job and replace me? And most experts now say, you're never going to replace the human. It's a relationship business at its core. It's a trust business. But I think last time when we spoke, one thing that struck me, anyways, that you said a 20-year-old today may never need a human financial advisor. So just interested quickly, I know we've been going long on this segment, but what's your kind of take on that? Do you still believe that a 20-year-old maybe doesn't have a financial advisor, or do you believe the human element is still going to last somewhere in between? What's kind of your take?
Yeah. And I think, so I should first say there's probably always going to be some number of human financial advisors and wealth managers. It may be just like a status symbol or something someday down the road. I don't know. But yeah, the example I've given often, and I think I still believe this to be true, is like a simple, XY axis. Take someone at the intersection of the X and the Y, is born today. Take that thing out on almost a perfect 45-degree angle. At the other end of it is somebody who's, let's say, 80 or 90 today. And what that represents is the likelihood that they are going to have a human financial advisor, right? So the 90-year-old, it's up by 100%. The person born today, it's 0%. So somebody in the middle, just depending on where they are in their life, will dictate the likelihood that they're going to have a human financial advisor. And it may be unpopular, but I just think like that's a very real possibility, and it's not like I'm trying to build that future. I think that what I'd prefer is that we have. I think about this often, even if I take it outside of the context of this industry, and I think about, some of the most memorable moments of my life, or, even the most cathartic, kind of business moments, if I try to make it more, a bit less personal, but more business, they're still very human, so it could be like, you're dealing with something that is just painfully difficult and hard and challenging. And then you are in the physical presence of other human beings, and you and everyone opens up and kind of shares kind of what's happening, and like you have a bit of an embrace of sorts, and you're like, and it ends up being something that really fills you back up. There's a sort of a biological, trigger that's happening, oxytocin and serotonin and like all these things that are happening. I've never had that when I'm using ChatGPT or Claude, right? And so I do think like, look, there's always going to be this place where like there's a reaction that our bodies create, and I don't know that that's going to be quite there. But when it comes to like the fundamentals of you know, um, you know, what should my budget look like? Like, we're not that far from it today. And if people just use a little tiny bit of imagination in 20 years, why would you ever have a human being help you build a budget? Like, it'll be like the most simple thing in the world for an AI agent to do. And then, you could, as things get like slightly more complex, you start working up the food chain. You go, okay, well, what about, once I have my budget, can something just help me automate my cash management, like pay my bills for me? Like optimize a debt management plan, like which things should get paid first and just like automatically make those payments. Again, no need a human for that. You might not even need AI to do that. Like theoretically, like AI could help you build a, sort of a linear algebra, kind of equation that optimizes and then does it, in a more deterministic way. But the point is like you start moving along the life, a life path of financial complexity. And if you're, again, a newborn today, that you first really start thinking about money maybe in 15 to 20 years. It starts getting complex between 20 and 30 years from now. Even if AI slowed down to Moore's law as far as like the way that it multiplies and its ability to, produce outputs, today is far greater than that. And it's fairly incomprehensible, for everybody, myself included. Like I can't do the mental math, like as far as like how many turns of improvement will we see? But I'm just smart enough to know that it's like, again, it's incomprehensible because it's so much more vast than it is today. And so I just, imagine so many things like we'll just be able to have machines that take care of them for us. And I don't know what kind of a society that is. I don't know what kind of a future that looks like. I mean, I would imagine it's different and it's a little bit frightening. But like if we're being realistic, we should probably try to prepare for that future and work on the things that are unusually human. But then that's my take. I mean, you're all younger than I am. I can tell you that I have kids that are like in their early 20s, and those early 20 somethings. I mean, like they just they only really know like an adulthood with AI being the first place you go for almost every answer. And there's a million other follow-ons to that. I also have a young kindergartner, and I'm like, what's his life going to be like? It's hard to say, right? So financial advisors. Good news is most advisors are old, so they'll be retired anyway. But if you're like 25 in this business, you got to think about like, where do I want to be in 20, 25 years? It's going to be a different type of industry.
Yeah, for sure. It
super
might be not the most popular opinion, but sometimes the unpopular opinions are the most important ones. So we appreciate.
Well, on a high note, I'll give people a high note of this. If you look about the mathematics of what I just shared around this, 45-degree, perfect, angle line, most money is in the hands of people who are older. So a good way to think about it is like for the next 50 years, like the majority of the money will still be like in the hands of people who are 45 and older. And again, the majority of those people are going to have financial advisors. So we've got a 50-year run of like the revenue earned and like the assets to manage and all that stuff is still going to be very, very much human for like 50 years, right? I mean, only at that point, probably 50 years, does the tables turn. And like, for those who've been in the business a while, like it reminds me a lot of the transition from mutual funds to ETFs. It's like an ETF has been a superior product, an objectively superior product for 20 plus years. And yet only now is it like starting to catch up in total assets to mutual funds. It took 35 years, right, for that to happen. And even now, it's going to be another 35 years, and the mutual fund industry will still be, tens of trillions, maybe hundreds of trillions of dollars because of a whole bunch of kind of interesting natural tailwinds. So it's still a hugely profitable, like incredibly profitable business to be in, even though there's not a ton of growth there. So I think virtually anybody in the industry today is probably okay, but again, it's those people who are young today, 20, 25 years from now, when they get into space, we might be on borrowed time by then in terms of like things being the way they are at this very moment. Like things will, of course, change dramatically.
And another thing, to just when you were thinking, it's almost like the transition from brokerage industry to more financial planning that we've seen over the last 20 years, and what the next 20 years might be more transition to more the human elements and the elements and the behavioral finance and the emotional aspects of money that you talked about earlier. So maybe it's just going to be a continuing evolution of what an advisor does, what it gets paid for, and what it means to.
Super well said. Yeah, couldn't agree more.
Well, guys,
shall we do it?
This is a great conversation. Yeah, I think we should maybe close it out here. Jason, this was a fantastic discussion. I really appreciate getting your insights here. Thank you so much for coming on the podcast.
It's my pleasure, and no pressure, John. Now that we've basically built a relationship, via metaphor. So
I'll be watching out for the automated email.
Yeah, awesome time with you guys.
Take it easy, Jason. All right, everyone. Well, thanks for listening to another episode of The Advisor Upside. Make sure you subscribe and like. You can find us on any platform where you can find podcasts. We're on it. Let us know what you think of this episode. And if you have anything that you'd like to see in future episodes, please feel free to hit us up at podcast@thedailyupside.com. John, am I forgetting anything?
Oh, no, just, if you're enjoying the podcast, we're sure that you'll also enjoy the newsletters that we put out, week by week. We've got the flagship Daily Upside newsletter written for consumers, but there's some interesting stuff in there that I think advisors would also find fun to read. And then we've got the Advisor Upside, from which this show takes its name. We have the ETF Upside, more of a market-focused publication. And finally, the Retirement Upside, our newest newsletter. As the name details, it's all about retirement. That comes out on Friday morning. So if you haven't subscribed to that or any of the other newsletters, we would love for you to do so. With that, Sean, let's go ahead and close out the episode, and we'll be back next week with another great guest and another fun conversation. Take care.
Take care, guys.